Bank of America stock ticker BAC is currently trading at $33.95 per share. Over the past year, this company's down around 4.54%, and year to date, they're up barely, up around 0.82%. So in this video, we're going to be diving into this company. We'll be looking at their most recent quarter's earnings report, and of course, jumping into my stock valuation spreadsheets where we'll look at a few different valuation models. Like always, if you'd like to join a community of dividend investors and get access to any of my spreadsheets, then you can head over to my Patreon page at the link in the description. But let's go ahead and start digging into this company. Now, first off, we can see down here, they have a starting dividend yield sitting right at 2.82%. So let's go ahead and start digging into these dividend metrics. If we come over here and click on dividends and look at the dividend history, we'll zoom it out to 10 years and we can see this company has massively grown their dividend payments over the past year, going from 1 cent to around 24 cents. Now we need to step back for a moment and see why they've been able to do this. Well, if we zoom out, we can see they pretty much cut their dividend payment during the financial crisis, and since then, they've been focused on growing that dividend payment back to where it was previously before the financial crisis. So it still has a really long way to go, but if we look at the dividend growth rates over a 10-year time period, it's still pretty ridiculous at around 37%. Obviously, that won't be sustainable moving forward, but even when we look at the 5-year and the 3-year dividend growth rates, it's been pretty solid at around 11.24% and the 3-year at 8.5%. So still overall, pretty solid history of dividend growth, even in the short term. Now, when we click on dividend safety for this company, if we scroll down, we can see they have a dividend payout ratio of right at around 30% when you look at the trailing 12 months. So let's scroll up and go back to the summary tab. And again, we can see over the past year, it's been a pretty choppy ride for the company. 52-week low of around $24.96 and 52-week high of $35.39. Now, just a few months ago in October is when they hit that 52-week low of around $25 per share. Now, during that time period, if we click on dividend yield and go down here on Seeking Alpha, we can see their starting dividend yield was sitting at around 3.5%. I did add a few shares to my personal portfolio during this time, but again, at current prices, starting dividend yield still pretty decent, sitting at 2.82%. Now, they did recently release their latest quarter's earnings report, so we need to dig into that before we look at the valuation. If we look at this earnings report, we can see total revenue net of interest expense in 2023 was sitting at about $98.6 billion. Come down and look at the bottom line, we could see net income came in at around $26.5 billion, giving us diluted earnings per share of around $3.08. Now, if we slide to the third slide, we can see a lot of organic growth from this company in 2023, despite being one of the largest banks in the US. We can see they added over 600,000 new checking accounts. They added 4.6 million credit card accounts and 3.8 million consumer investment accounts as well. And that's all just in the consumer banking segment. If we look at the global wealth and investment management, they opened a record 150,000 bank accounts. If we look at global banking, we can see they added 2,500 new clients, which was more than 2x in 2022, so that was a massive jump up. And they were also number 3 in both the US and international investment banking fees for 2023. And even in the global markets, they saw some decent growth as well. So overall, there's still a pathway for organic growth with this company. Now, if we look at some global trends, we can see 2023 consumer payment spend was $4.1 trillion, and it was up around 4% year over year. Now, here's what's interesting about this. We can see payment with cash and checks was actually down about 5% in 2023, but we can see banks benefited from increased credit and debit, ACH and wire, and P2P and P2B. And if we look at the 2023 credit and debit year-over-year growth in segments like travel and entertainment, food, retail, and services, they pretty much all saw increases. Now, we saw a slight decrease in gas, but my guess is this is because we saw lower gas prices in 2023 rather than 2022. So let's go ahead and jump back over to Seeking Alpha. Now we need to address the question, is Bank of America trading at a good value right at $34 per share? To answer that, let's go ahead and jump into my bank valuation spreadsheet. And again, we'll look at a few different valuation models, and like always, if you'd like to download the spreadsheet, then you can head over to my Patreon page at the link in the description. Okay, let's go ahead and come up here and plug in stock ticker BAC and hit enter, and this data will automatically load in. Now, if we come down here, we can see institutional ownership at around 71%. Now, what's interesting about this is actually one of the largest positions in Warren Buffett's Berkshire Hathaway portfolio. It's the second largest position, making up around 10% of his portfolio. So always interesting to see what he's holding, and Bank of America is definitely one of those companies. Now, this company has a very high beta sitting at 1.39. So a lot of the times you see quite a bit more volatility with this company than that of the market. So definitely something to take note of. If you're someone who doesn't like volatility, this might not be for you. Now, if we jump over to Graham's valuation, let's go ahead and start breaking down this first valuation model. you can see we have our earnings per share, we have our growth rate projection, multiply it by 4.4, which is the average yield of AAA corporate bonds, and then divide all of that by Y, which is the current yield on AAA corporate bonds, currently coming in at 4.81. This gives us an intrinsic value of $31.60, just a little bit below that current trading price. Now, the next valuation is one of my favorite ones for bank stocks, and that is the historical price to tangible book value. Basically, what we're doing is we're looking at the company's share price over time, looking at its tangible book value over time, so we can see the historical price to tangible book value and we can see the trends. Now, what we want to do is see if the current price to tangible book value is below the average price to tangible book value, because if it is, that could be an indicator it's slightly undervalued compared to where it's traded historically. Now, it is pretty close, but again, compared to where it's been historically, it looks like the company may be slightly undervalued in this scenario. Now, the next valuation we'll look at is going to be our multiples valuation. Basically, all we need to do is plug in our comparable companies right here. The data will automatically load in. We take their stock price, divide by earnings per share to get the price to earnings multiple. The average PE sitting at around 10.84. So with Bank of America's earnings per share of 3.08, we come to an intrinsic value of $33.41. So yes, it is worth noting these bank stocks trade at quite a bit lower price to earnings multiple than a lot of their peers in the S&P 500. Now, the last valuation we'll look at is the dividend discount model. And this values a company based on how much they pay out in dividends and how much that dividend is increasing over time. So I plugged in the company's quarterly dividend payments so we can see their yearly dividend payments and those growth rates. We have pretty high growth rates overall, average growth rate of around 10.36%. So moving forward, I'm projecting a growth rate of 6%, discount rate of 9%, and this gives us a dividend discount model price per share of $31.09. So when we jump over to the output tab, we can see all four of the valuation models that we use in this scenario. We have grams at 31.6, multiples at 33.41, and dividend discount model at 31.09, and the current price to tangible book value came out to 1.38, which if you'll remember, we found that was slightly below the average over the past decade. Again, a slight indicator it could be undervalued. When you put all of these together, we come to an intrinsic value of $32.03, pretty close to that current trading price. But with a 10% margin of safety, you could see our acceptable buy price sitting at around $28.83 and a 20% margin of safety sitting right at around $25.63. So it's really not quite within our buy range at this current price. Now keep in mind, again, just a few months ago, it was within this range in October when it got all the way down to a little below $25 per share. I added just a few shares of it to my portfolio during that time, but I haven't added any since then. But there you go, there is a quick analysis on Bank of America stock. Go ahead and let me know what you think of this company in the comments down below if you plan on buying or selling. And like always, if you'd like to join a community of dividend investors and get access to any of my spreadsheets, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.